Tracking coronavirus tonight. Since late March, the COVID-19 crisis has shut down millions of businesses across the country, forcing millions of people to temporarily lose their jobs. As you know, the federal government has stepped in to help those out of work and help business owners as well. Well, new tonight, WATE 6 on your side consumer reporter Don Dare talks with a tax expert about the implications of federal relief programs. Don.
Well, Lori, the 8 programs have several different long names, like the $2 trillion Coronavirus Aid, Relief, and Economic Security Act, commonly known as the CARES Act. Under the government programs, there are several packages: stimulus money for individuals, the Paycheck Protection Program for small business owners, and loan programs. It takes an expert to figure all this out because, as a country, this is all new financial territory. Over the last month, income tax specialist Mark Kern has received lots of questions from old clients and new ones about COVID-related federal relief programs. Within the last month, money has been directly deposited into bank accounts of millions of taxpayers, plus businesses have received money. The CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. There are 2 prongs to it?
Correct. It's basically the economic stimulus for individuals and the PPP and the expanded EIDL for businesses. The government's purpose was to get money in the hands of businesses and employees quickly, and they did that quickly. It's the fastest I've ever seen our government move to this effect. These are all of the PPP applications that we've filled out over the last few weeks for our clients.
What's it like filling it out?
It's actually a very simple application. It's only 2 pages, and it is basically based off the employer payroll to figure out the loan amount.
What is the Economic Injury Disaster Loan?
The EIDL is what we call it in the industry. It is basically the second part of the business funding. So that is additional money in addition to the PPP that businesses can use to cover their expenses while business is down or and shut down by the governments.
We asked about the stimulus checks taxpayers are getting. That new money will not be taxed next year, but there will be financial implications.
The stimulus checks that individuals and married couples and their dependents are getting is an advance of the 2020 tax credits. So therefore, your 2020 return could be reduced by the amount that you received in the stimulus package.
If you are eligible to receive aid under the CARES Act, listen up.
The biggest piece of advice that I could give is get in and get in quick. You know, you have to be in the front of the line on this thing or you are going to miss the boat. Get in there early. Contact your bank is where you need to start. And then if you have a tax professional helping you out, they can provide the information to the bank.
Some good advice. Several other things to consider. Individuals, for those who have individual retirement accounts and are required to take out a minimum distribution or RMD, there is a waiver on that requirement this year. You can keep the money and let it grow. And don't forget, the IRS moved up the federal tax payment deadline to July 15th. So if you haven't done so, you have another 3 months to file your individual tax return.